So this is very important. You need to know and pay attention to the entire video because I got a lot to tell you to prepare you for what's going to happen in the next 24 hours as it relates to crypto and the overall financial markets. We've got a very, very big, massive event coming, going to give you all the details and everything you need to know. If you haven't already done so, please drop a like on the video, tell the algorithm that we're here, and subscribe if you want, if you need below. Because here's the thing. I make this content because I want to keep you up to date, let you know what's going on, because you need to know and you got other things going on in your life. And that's what I'm here to do, to keep you updated. All right. So we have 24 hours left until we get a major decision. And there are major, major ramifications in this decision. So this is very important. Okay. So right now, crypto, as of recording this video, is up about 0.5%. Bitcoin's down, Ethereum's up 1.8, XRP crushing it, going up 10+%, 42 cents, finally crossing over the 40 cent. There's a video on that coming very quickly, and just that's good stuff. So let me show you what's going on. So the Federal Reserve, yes, this does matter to crypto. This is a huge, big deal. Okay. You're not going to see crypto really do anything until approximately about 2:30 p.m. Eastern Standard Time tomorrow. Okay. We had bad information coming in February as far as sorry, I think that's got some audio in it. I apologize. We had that anyway. I was hearing some audio feedback. We had a in February we had bad jobs report come in. Jobs grew higher. We had a hotter than expected CPI, Consumer Price Index report, and we had a hotter than expected PCE report. These are all inflation indicators. Okay. So tomorrow, the Federal Reserve at the FOMC meeting, they're going to announce their interest rate hike. But here's the issue. The expectation was that it was going to be a 50 basis points raise. Okay. And that actually went up because before February, we were expecting kind of a 25 basis points raise. Then what happened is we started getting all of these bank closures: Silicon Valley Bank, First Republic, Credit Suisse over in Switzerland. All these things started to kind of start to loom and become a thing. There was a report that came out that said that there was 186 banks out there that were in somewhat trouble because they had very similar investment ratios and deposit ratios. They had very similar ratios as to what Silicon Valley Bank did and or First Republic did. And these are banks that obviously went out of business. Okay. So with that said, you have to understand that you've got the Federal Reserve trying to do their thing in fighting inflation with the interest rate hikes. They had 7 of them last year in 2022. Never happened before in the history of time. And it is their, raising interest rates is the base interest rate is the main weapon that the government, the Federal Reserve, has to use to fight inflation. But all of this raising of the interest rate is hurting the banking industry. Okay. Whether you like in the banking industry, you hate them, whatever it is, it doesn't really matter to the point of this discussion. That's the landscape. Okay. So that's the rock in a hard place, because if the Federal Reserve starts to continue to if the Federal Reserve continues to raise interest rates as quickly as they do, then they're going to continue to hurt. Then they're going to hurt the banking industry. Okay. So that's what you need to understand, is that if they continue to do that very aggressively, that will continue to hurt the banking. And whether you hate banks or not, we don't need the banking industry, which is a foundation of all of our worlds, to continue to be in crisis. So now the expectation is that we may be looking at a 25 basis points raise coming tomorrow from the FOMC Federal Reserve meeting, because primarily, ironically, of the banking issues. Because we would, before that, if the banks hadn't started to show cracks, then we would most likely be getting a 50 basis points raise. And so to bring this back home to crypto, okay, is that it is inflation and the Federal Reserve hiking the interest rates that has impacted crypto. It is what took crypto from almost a $3 trillion market cap down to 700 billion in the year of 2022. It's inflation, as the backdrop, that's creating all this fear, uncertainty, and doubt, and all this kind of stuff. But then it's this compounding effect of raising the interest rates is creating fear and in the mind of the consumers, as well as raising credit debt. People are now going into massive credit debt because of rising interest rates. It's just this kind of very perfect storm cyclical thing. And ultimately, if the fear continues to rise, people will pull their investments out of stocks, crypto, things like that. Now, with all that said as a baseline, I think if we get a 25 basis points raise, you're going to see crypto take off. Okay. If we get a 50 basis points, we might have a little bit of a jerk down, move down and then come back. Just stay tuned. This is a very convoluted mix of things and all these factors. Hopefully, I've given you some clarity into it. It's pretty complicated, and crypto is involved in this mix. I'll see you. Thanks for your support. Have a good one.